Hello, investors and traders, and welcome to the weekly market report with the market guys. I'm Ajay Monti. This is a one-year daily candle chart of the Power Shares, ticker symbol QQQ. This is the ETF that represents the NASDAQ market. And as I do each and every week, I've left my lines on the chart so you can see how the forecast from last week panned out. And this diagonal red line is what I drew last Friday after the close, and I said that we would most likely rally up, and that's exactly what we did. The end of that line, by the way, is my target price, and you can see how the NASDAQ closed exactly at my target price. Now, what does this mean for next week? Well, if you take a look at the volume down below, you'll see that as the market was rallying, the volume was drifting lower. So what that tells us is that the buyers are losing some of that momentum. The other thing from this candle right here, that's called a spinning top, that's usually a sign of indecision. And we generally see those at market pivot points. You can see back here, there was a spinning top, here was a spinning top, and we generally see spinning tops and dojis right before the market pivots and goes the other way. So for next week, I'm going to erase this line right here. For next week, what I'm going to do is draw my line and what I think could happen in the markets. I think we might even drift just a tad higher on Monday just to get some of that buying action out of the way, and we'll have those last minute buyers more or less regretting those buy orders on Monday. But I do believe the end of the week is going to be powered by the sellers, and I think we're going to drift right back down to what will be the moving average. As the prices move higher, this blue line will get drawn up to where the price action is. But we have a wide divergence here from that 20-period moving average, and that's known as a rubber band effect. We, again, will most likely see a snapback to that moving average as prices start to move lower, and we might even see some profit taking pushing that market down as well. The other thing is there's a gap up here. This horizontal line was my gap fill resistance line, so I think that resistance will hold, again, giving us more weight to the downside for next week. Now, if you look at the VIX, this is the volatility index, kind of mixing it up a little bit here for you. I did put a forecast out for the VIX because this is a leading indicator that is contrarian indicator to the S&P, and I said that we would most likely go lower on the VIX. Look at this. Again, this is pretty amazing how technical analysis works out. It's almost as if the VIX was following my line, but that was the angle that I drew, and the VIX dropped and it stopped right at this key support level. Again, that end of the line right there is my target price for the VIX. And being that the VIX dropped, as I said it would, the S&P rallied. Again, this is a contrarian indicator to the S&P. So I think for next week, we're going to see a snapback to that moving average for the VIX, and that will most likely draw prices lower in the S&P. So we'll leave that in place. Notice the angle that I drew on this line. If you look at my previous forecast, you'll see the angle is quite steep. And that's because when the VIX rallies, it generally rallies in pretty steep angles because that's when the emotional premium in the market starts to heat up and fear sets in. So that's going to most likely be a spike in the VIX. Now that brings us to the S&P. SPY is the ticker symbol for that. And you can see again, the market followed my forecast line to the letter. We went a little bit over my target price here. I said my target price, the end of that line being at a resistance point right there. I'm going to erase that because as I look to the left, you'll see another high right there that will most likely act as resistance. So I think the S&P is going to drop just like the Qs, as I mentioned, a snapback to that moving average. And I think the end of that line right there will be my target price for the S&P. Now, if we look at the diamonds, this represents 30 stocks. You'll see that, again, the volume is starting to drop as we're getting these green candles. And this is a long stretch of green candles. This is known as a stale green light. We have 1, 2, 3, 4, 5, 6, 7 candles in a row, all in an upward direction. And I think that we're going to pull back in the diamonds as well, because we have this resistance up here that I think will hold. So again, leaving all of these lines in so you can see the evidence and the history of what I've drawn for forecasts, I'm going to say that the Dow is going to, again, pull back to that moving average. I don't think we're going to see a major collapse in the market, because next week is options expiration week. And we generally have a slow week for that week, but the week that follows options expiration Friday tends to get a little bit more volatile, because option traders tend to have an effect on the general markets as their options expire and positions get rolled over. So that's for the diamonds. If we look at the last market, which is a more broad-based index, and that's the Russell 2000, we rallied exactly like I said we would. We have 1, 2, 3, 4, 5, 6 green candles in a row. We blew past my target price, and we even blew past this resistance line. But look at this. Interestingly enough, we have another resistance point right there at that high. And if I draw a horizontal line, it completely and perfectly matches with the high that we had from Thursday. So I do believe that the Russell 2000, like the other markets, is going to pull back and snap right to that 20-period moving average. I'll move this out of the way so that we can get a clearer picture of what that looks like. If you'd like to learn more about the Market Guys, just go to themarketguys.com and you can click on this video tab right there, and it'll bring you to a library of very short videos called Market Shots. I want you to imagine something. Imagine if I had the newspaper for next week with all the stock prices attached to it. You think you can make some money? That would be a guaranteed sure thing, money in the bank, and you probably make a lot of money if you absolutely knew that the markets were going to close at a certain price. Now, of course, I can't give you that kind of a guarantee, and I certainly don't have next week's newspaper. But when you look at the charts, that's as close as you're going to get to being able to forecast. And all of these concepts that we talk about on our video page are topics that are going to help you develop your skills so that you can become a better forecaster in the markets. We use candle charts. It's a very simple process. You just have to learn what the candles are all about. You have to learn how volume incorporated into our forecast is a really great leading indicator. And maybe you'd even want to explore this rubber band effect, as I mentioned in the video earlier. So that's a gift to you from us. I hope you enjoy it. And we look forward to our next report next Friday. Stay tuned. Stay close to the Market Guys, and we'll talk to you then. Bye-bye.
For almost 3 decades, Ajay Monti has motivated audiences worldwide about creating personal wealth and winning in business. His time-tested risk management strategies focus on ideas that involve a keep it super simple approach, also known as the KISS principle. These concepts have been delivered to people in over 16 countries around the world, reaching audiences in the millions. Ajay is a best-selling author of 2 books, The Market Guys 5 Points for Trading Success and Take Charge of Your Money Now, both of which have been featured on PBS Television, Fox Business News, ABC TV, as well as Sirius Money Radio. As a financial educator and consultant, he has worked with some of the most recognized names in the financial industry. Companies like Bank of America, Charles Schwab, E-Trade Financial, Scotiabank, and TD Ameritrade's Thinkorswim. If you have ever been challenged with having to make a tough decision regarding when to buy or sell a stock, then help is on the way. The Options Oracle and Equity Oracle Alert services are designed to help you make those tough decisions. Ajay will not only help you find the best trade candidates, but he will also lay out the exit strategy for each position in an easy-to-understand format that anyone can follow.
Hi, my name is Ajay Monti, Chief Market Strategist for The Market Guys. For almost 30 years, I've traded stocks, options, futures, and even currencies. I've traveled the world teaching people just like you how to profit in the market using time-tested strategies that focus on risk management. You see, the secret to making money in the market depends on your ability to limit losses when you're wrong. In other words, if you want to make a lot of money in the market, don't lose a lot of money in the market. Now that may sound funny, but it's true. Most investors are challenged with two questions. The first question is, how do you find a good stock? Well, the best way to find the right stock starts with eliminating all of the stocks you would not invest in. This process of elimination is called stock screening. And our services help you overcome the odds so you're putting your money where the money is going. We're simply following the trends. The second question most people ask of me is, when is it time to sell? Well, if you don't have an answer to this question, then you might find yourself in a position where you're holding on to your stocks when things go against you. This is the worst thing you could possibly do because I believe this is no longer a buy and hold market. It has evolved into a buy and protect market. Holding on and hoping for things to get better is not a strategy. In fact, doing this will eventually lead you to a catastrophic loss, and you wouldn't want that. Our trade alert services help answer these two questions. Not only will I help you find the right trade candidate, but I'll also show you how to use the charts to manage risk. I don't use the charts to predict the future. I use them to protect the future. The charts tell me when it's time to get out as well as when it's time to get in. And that's what I'd like to teach you as well. We have two services, the Equity Oracle and the Options Oracle. The Equity Oracle is an alert service for traders who would like to trade only equities, whereas the Options Oracle is our premier alert service for both equity and option traders. Each alert is laid out in an easy-to-understand format that shows charts depicting entry and exit points. Risk management is our cornerstone of each service, so you don't have to struggle with the decision of when to get out or when a trade goes against you, when should I take my loss. The strategy is to use the KISS principle, keeping it super simple. As a bonus, you'll have access to a live Q&A session as well, each and every month. This is where you can submit a stock symbol, and I will analyze these stocks while we discuss the best trading strategies for each position. And it gets better. In addition to the alert service and the live monthly Q&A sessions, we're also developing a member page that will include instructional videos about how to get the most out of our service. Without question, this is the best trade alert service available on the market, and we look forward to having you as our newest subscriber. Simply click on the link below to subscribe. It's easy. Once again, I'm Ajay Monti, Chief Market Strategist for the Market Guys. Thanks for watching.
Enrolling in this service is easy. Simply click on the link below to subscribe, and your weekly alert will be delivered right to your email box. And if you act now, we will include AJ's best-selling book, The Market Guy's 5 Points for Trading Success. This is a first-time offer that will get you on the road to success and keep you there. Remember, if you continue to do what you've always done, things will never change. Positive results will only come after you've taken the first step in the right direction. We look forward to having you as our newest member.